Welcome back to Primary Source China Investment. This week we're on show L3 and want to wish everybody a happy 4th of July. Hope you're celebrating somewhere nice. So with 4th of July comes the halftime for the investment year. So 2022, we're at the half. And we thought it'd be a good idea to go through where we are, what happened, and maybe some input into what's going to happen for the rest of 2022. Our viewers know that we've been talking about the news that's been coming out since the beginning of the year, following it every week. And the news that came out earlier in the year would be politely described as terrible, and more accurately, probably the worst data in a generation for China. And what we mean by that was it wasn't just zero COVID. It was PMI data that missed all over the place. Consumer confidence was bad, unemployment bad. The bad news was everywhere from a macro perspective. The only bright spot was that inflation on the mainland was held in check. So given these headwinds, we would expect a down equity market. But you might be surprised, it's not as bad as you would have anticipated. And one of the shows Peng and I talked about was, remember, we said news is a lagging indicator. So the market has really bounced. So where are we? We're down, the CSI 300 is down 9.2% year to date. But in US dollar terms, it's down a little bit more because renminbi has depreciated 5% versus the US dollar.
Yeah, firstly, it's time really flies. 6 months already gone, 50% of the time already gone for this year. For the China equity market is right now seems to be independent of the global equity market. I think that's probably related to the entire economy change. Because in the last, in the first quarter, a lot of the really bad news is happened. So I think already priced in the market. From our experience, market news versus market performance in the bear market, any bad news can push the market down, and in the bull market, any good, you just listen to good news. Yeah, don't need to worry about any of the bad news. Surprisingly, the Asian market as well as the global China-related sectors, they get bounced back. And quite steadily, just one way to go up. It's surprisingly to see such kind of the situation, but it seems like pretty strong than most of the people expected.
Yeah, you saw the equity market bounced about. Actually, it's bounced off of its April low by about 20%. So that's a pretty big jump. And then all of a sudden, all the analysts jump in and say, oh, we've gone from China's a horrible investment to, oh, there's a lot of opportunity in China in 3 short weeks.
Yeah, that's one monthly bounce back. It could change people's mind.
Yeah.
In China, though, if you bounce 3 days, you will immediately change from bear to bull.
Yeah. I just wanted to touch a few of the sectors. I mean, not surprising, energy was the big performer on the mainland as well. That was up about 31.5% year to date in renminbi terms. And then the two worst performing is marks similarity in the US, which was information technology and communications, which were down about 27 and 22% respectively. So no surprise on some of those some of those sectors, because energy is up, and we're going to talk about commodities in a minute. But let's shift to fixed income, peng.guo, because fixed income is interesting, right? We mentioned renminbi depreciated 5% versus US dollar, so that's going to really affect your fixed income if you're investing in US dollar into renminbi. So no surprise, the fixed income market traded as CBON was down about 5.2% year to date. And interesting, the 10-year, although it moved a little bit, it's exactly where it was at the beginning of the year. So it was 2.8. The China 10-year government bond was 2.8 at the beginning of the year, and it's currently about 2.8% now.
Yeah, surprisingly, the currency affected the performance significantly for the international investment. So I think people probably underestimate why you see the certain kind of the return, and plus like the dollar get bounced. So as well as the Fed policies, they can immediately affect the foreign exchange market. So I think that's probably bring a lot of the currency risk to the international investment.
Yeah, yeah. Although long-term U.S. dollar renminbi is pretty stable. It's not considered volatile. You have annualized volatility, maybe 3 or 4% on a historic basis.
That's true. I think is for this year, it's just in March, the U.S. dollar and the renminbi get depreciate. And for the rest of the 3 months, it's looked like just have some volatility. So quite stable. But for this year, actually a lot of the topic is still related to the energy. In the China-Asia market, you can observe like the solar industry. So they get they are the pioneer of the entire sectors, as well as the new clean energy related sector, as well as the new energy cars. All those sectors, actually, they're all related to the energy.
Right.
Obviously, the crude oil is pretty strong. Even
Yeah, it's like clean energy, dirty energy. It was all up.
Yeah, that's exactly right. It's really like the same of the market.
Yeah, yeah. So that brings us to commodities, right? So that's a good transition because some of the commodities, and some of our viewers may not be aware, there are three main commodity markets in China. There's four, but three. Shanghai has two, but there's three main ones. There's Zhengzhou, Dalian, and Shanghai. These three exchanges trade everything from industrial and precious metals to agricultural and energy products, and some that are even bespoke to China. The headline inflation was tame, as we discussed earlier, but almost all commodities were up year to date. And of course, the largest was energy, up 46.8, petroleum up 34.6, oil seeds and coal round up the top four. Just quickly on the bottom, the four worst performing, two of them were actually up. So the worst performing was industrial metals down 9.2, precious metals down 0.1, and then grains were up 0.66 and 1.04. So you do have almost all commodities up, but certainly the energy commodities were up the most.
Yeah, I think whatever you mentioned, commodities really connect to the international market. So their price affected by the international market as well as by the exchange rate. But China has their own, like the big commodity they call the Black Series. So Black Series is, so they probably get up for the first quarter at around 15 to 20%, and the second quarter it dropped back. So entire the 2020, the overall is looks like a flat.
Mm-hmm. But it was up big in the first few months.
That's right. Yeah.
Okay. So you can see you have a market that equities were down, but not nearly as far down as some had anticipated. You have a bounce from the April bottom. So from the bottom, we're up about 20%. You had fixed income market down about 5% in US dollar term. In renminbi terms, it behaved appropriately. The one point I wanted to make about that, if you go back in time in the beginning of the year, we were talking about massive defaults. Remember, the entire property industry was defaulting, and there have been what we'll call defaults with Chinese characteristics, right? They're still working through. Kaisa is still working through, and Evergrande is still working through, but these elements did not lead to a quote-unquote Lehman moment. And remember, peng.guo and I said it would not lead to a Lehman moment, and the fixed income market actually behaved as it's supposed to.
That's right. I think the country just control and isolated upgrade the equity risk. And it's not a factor to, but the entire the real estate industry significantly hurt.
Yeah.
But right now looks like they already go through the worst time. And I just see like the CEO of the Vanke. He said that probably he see the hope of the this industry. So probably they still have some growth potential, but probably the worst scenario already gone.
Well, there's going to be other. I mean, I just read that Shimal is defaulted on U.S. dollar bond. So, you know, they always seem to default on the dollar bond, not the renminbi bond.
Yeah, that's an individual corporate bond. It still have their own risk.
Absolutely, absolutely. Well, we're going to leave it there for the first half. Keep watching, keep following it. It does seem like the equity market does have some tailwinds right now, not necessarily on an earnings perspective, but certainly from a demand side perspective.
Great. Thank you.